Welcome, everybody, to office hours for Traders Pulse for February 16th, 2024. My God, 2024, we're in the future, Mike. We're in the future. Does it feel like it? Does it feel like that to you?
Always, but I live in the future. Always trying to think ahead.
That's right. Exactly. I mean, that's what a trader is, right? I mean, just capitalizing on the future. I remember when I found out that the stock market, or when you realize that the stock market is weighing what the world will be like, what economic data will be like 18 months from now, and
hmm
that's how you should think about things. It sort of screws with your world because you're like, we're in a recession, and people are like, no, we're not in a recession, and then 2 years
We've
from now
already
they're like, we're
priced
in a
that in.
recession. No,
Yeah,
we're fine. Yeah,
exactly. We've already priced it all in. Where you think it's going to be this Christmas, we priced that in too.
that's right.
Everybody's always trying to predict the future.
Excellent. Well, we're here with Mike Christensen, co-founder of Traders Post. I'm Tom Hartman, working for the marketing team. As always, every Friday, we like to answer your questions that we've seen in our Discord groups, online, and on our support forums in order to make using Traders Post better for you and to get feedback from you so that we can make Traders Post even better than before. Today, we have a whole host of new questions, which will pester me and Mike with. And if you have anything else that you want to ask while you're watching, please feel free to leave it in the chat, either on Twitch or on YouTube, and we'll get to it if we have time. All right, Mike, would you mind? Let's go ahead and start with the first question.
Sure, sounds good.
All right, so over here, just 1 second here. All right, so this is one that came up in a meeting recently. This idea of why does my closing order at the end of a trading session sometimes not get filled? So that's essentially the last candle of the day. Let's say you're trading into, you're trading the markets, you're trading a stock, and you're placing a trade at 4 o'clock, and then it doesn't get filled. You don't get your trade closed out. Why might that actually happen?
Yeah, it's a really good question. And I think it kind of plays into one of the aspects of how trades can be delayed when you send a webhook and alert from TradingView off to Traders Post. There's sort of two hops that need to be made. There's the alert from TradingView, which needs to send a signal to Traders Post. And then Traders Post has to translate that into an order, which then gets passed on to the broker. And depending on the size of your candle at the end of the day, if you're sending this in at like literally the last second of the session, and we're only allowed to take orders within that trading session of regular trading hours, then by the time that order gets to your broker, it may be exactly past the bell, like one second past the bell or at the exact bell. And when that happens, the broker is going to reject that order because it didn't make it in time. So typically what I see traders do to ensure that they get their orders completed before the end of the session is try to make sure that you've cut it off about 5 minutes before. I think we see this show up a lot in trading activity on the charts in the last 10 minutes or so of the session. There's a whole lot of closing out my positions activity, if you will, where trades start to show up pretty quickly.
I know in PineScript, if anyone's wondering about coding something like that, so that to give yourself that flexibility, you can code it in such a way that you're not waiting for the bar to close in order to send the close order. You're just checking the time, checking the current time to make sure that if the hour, minute, and even second is exactly what you want it to be, then go ahead and send a close order in. It's a pretty simple idea, but it's nice to have a script like that, a function like that inside your script, so that you can protect yourself in this situation. Now, if you do, I know with Traders Post, if you do end up sending the order in and the market is closed, that order will be queued for the open of the next session. And so you're sending the close order request. Well, it'll send it there. So that's a great option. And inside of the dashboard of Traders Post, you'll be able to see it'll say that the order has been queued. So that's great to have.
Yeah, and I'm glad you brought that up because sometimes that's not a desirable behavior. You don't necessarily want to take the order the next trading session, but we will queue it up for the next session. To prevent that behavior, again, we just encourage you to make sure that you're checking on your order statuses at the close of the day, or making sure that you've closed out all your positions before the session closes. Now, this is really relevant to the stock market, and not necessarily futures obviously carries on an hour longer than the stock market does, closes for an hour, and then is back open again. So you may be comfortable allowing an order to remain open during that 1 hour close of the future session. And of course, the hours can vary on options as well. So make sure that you're thinking through the asset class that you're trading. You're aware of what the time restrictions are, and when things will cut off. Obviously, with the stock market, we all know when that one typically shuts down, and that's why we see the activity in the last 10 minutes.
Excellent. So on the heels of this, where we're dealing with the idea of how long it takes for orders to get executed, and when they get executed, I figured we'd touch on this idea of high frequency trading. So specifically, um, I've encountered a number of retail traders, and that's what they want to do. They have it in their mind. They saw some, a YouTube channel or some video or some movie where people made a bunch of money trading back and forth. Sometimes many times within a second, a few seconds. Why can't we do this normally as retail traders?
Well, it's probably useful to make sure that we have the right, agreement about what we mean by high frequency trading. I think in the realm of institutional trading, the realm of quant trading, where there's firms that have expertise in this, their job is to try to exploit very, very tiny movements in price in sub-second realms. So they're operating in the less than 10 millisecond range. If you've ever watched the movie The Hummingbird, I think this is a good example of the type of timing that some of these firms are looking to achieve, where just 1 millisecond can give you an edge against your competitors in the same space. They're working with high quality equipment, FPGA cards. The actual script that they use to execute the trades is literally written at the hardware level. This is not Pine script on a TradingView chart that's sending a signal. It's at the hardware level. They get a stream of pricing, and they're making decisions on trades, almost instantaneously. The other advantage that they have is that their infrastructure is located geographically as close to the exchanges as possible. So they have these significant advantages in time and speed that retail traders just simply don't have access to. So if we're trading something on the TradingView chart, we know already that inherently our pricing is delayed, our ability to execute a trade is delayed. Not to mention your order flow is being sold to institutions anyway that are engaging in this type of activity. So,
Right.
all the small amount of price movements that you're looking to exploit have already been exploited before you have a chance to even trade. So, as we see it, at least from the many strategies we've reviewed, it is very, very difficult to do a second base. Let's call it, like, let's say you set yourself up on the 15-second chart or 5-second chart, to set up a strategy that can exploit very tiny movements in price, because for the most part, you lose out on any opportunity in price movement due to delays, as well as commissions and any level of slippage if you're taking market orders, or your limit order doesn't fill. So the execution of your trades is unlikely to produce results. I've seen a lot of strategies out there that operate on very small time frames, and without accounting for those delays and commissions and slippage, sometimes it looks like they have 20,000% returns. And once you account for all those delays and you really test this out on a paper trading account, and you're incorporating commissions, you'll see immediately that very rarely stands up. I'm not saying it's impossible. There's certainly people out there that have figured out a good way to find a trend following strategy or a scalping strategy that seems to work intraday, and more power to you. But of course, it is very, very difficult to do.
I'll add to that, folks. The with the number of strategies that I've created, number of clients I've dealt with, I've seen a lot where people, when they're developing their strategy, they're not incorporating this idea of what's the margin requirement for their position, what are the commissions, what are the slippages. So there's two things you want to be keeping in mind. One, there are settings within TradingView that allow you to sort of simulate some of these conditions. You can enter a slippage amount, you can enter in a commission amount, and you want to be conservative in the sense that you want to choose You want to get what the actual number would be, what the actual commissions would be, what the, take a look at the different slippage that someone might get within that period of time, and overestimate. You want to get a number there that'll make it so that if your strategy is showing that it might be profitable, that you are taking a lot of this stuff into consideration. The second thing you want to keep in mind is that the TradingView, when you're back testing, is not taken. It's not running the test on all the tick data, right? It's not tick by tick information that you're getting. TradingView takes a snapshot of every candle, and the bigger the candle, the higher the time frame, the more snapshots there are. But it's just taking a few snapshots, and when it's filling your order in a backtest, is assuming that you're being filled at that price, when that might not necessarily be the case. And so, oftentimes it might make a strategy look far better than it is than when you run it. And I've seen the color drain out of people's faces as they either run it for testing, or when they enter in the slippage and commission, and all of a sudden this green line up and to the right is a red line down and to the right. And so don't put yourself in that situation. Just assume, start off with slippage, margin amount, and commissions. I mean, margin you can get away without doing that if you just want to surface an idea, but commissions and slippage, and you'll make your life a lot easier.
Yeah, and I would say, to add to that, Tom, great review. I mean, especially the nuance with TradingView, which can be different than other backtesting simulators. TradingView is, has its own flavor of a simulation environment, and it's worth knowing exactly how they simulate your trades. In addition to that, especially if you're automating these strategies with Traders Post, there's one extra element that doesn't show up on the TradingView charts, which is that delay from the alert taking place to the webhook being called and landing on Traders Post, and then us forwarding your order off to your broker. So we always encourage people to do walk forward testing by simulating their trades with a paper broker on Traders Post, so that they can actually see the timing of those events and see how quickly those trades execute, and confirm that their strategy will still hold up.
There's a thing you can do with there's a function called request security lower time frame, where you can basically, let's say you're on the 15-minute chart, you can grab all the candles, let's say from the 1-minute chart, and then you can go through that array and then sort of simulate, like, if my order was executed over here and the price didn't return to that price, I'm going to assume it wasn't filled, and blah blah blah. But at that point, I mean, what are you doing? Don't do it necessarily on TradingView. Go ahead and write a Python script, write something else, so that you can get more control. Don't recreate a TradingView chart within a strategy in order to get that accurate information. Okay, so that's great. Thank you for that. Because HFT I see just constantly. And even if you're just trying to trade within a few seconds, let's say you're not trying to do that crazy high frequency trading that Mike was talking about at the beginning, that some institutions do, but you just want to trade, you're trying to do a trade every 2 seconds, every 3 seconds, you're still going to run into a lot of the same issues.
Agreed.
There was something you showed me the other day, and by the other day I mean yesterday, which was the JSON payload builder in the back end of Traders Post. I
Sure.
thought it might be useful just to go over that for a second. I don't know if you want to share your screen, or I'll share my screen, but there's a thing in the back end. There's a feature in the back end of Traders Post that allows you to sort of build out what the JSON payload, the message that you're entering into TrendSpider or TradingView or what have you, to send to Traders Post. That might make people's lives a little bit easier. All right, so I'll share your screen here. And so this is in the back end.
Yeah, correct. So this is what, sort of just an empty Traders Post account would look like. Everybody pretty much starts out with a $100,000 paper broker account. I've set up a webhook already in my account. So if you head to the webhook section, which is where you're going to send your signals from TrendSpider or TradingView or, Python or Zapier, wherever you're getting your signals from, those signals can be sent to this webhook, and that includes the JSON payload. Well, sometimes those payloads are a little difficult to understand, how to construct them. We do have, of course, an entire section in our documentation that shows how to construct these webhooks and what the rules are. We've listed out all the different types of parameters that you can have inside the webhook JSON. The different values you can place, the rules associated with them. But it is a lot to read. We totally understand that. We are working on ways to try to simplify this. But one thing you can do today is to go to your webhooks section, hit send request, and then you can start to construct your trade. So let's say that I want to get the payload for how to buy the front contract for the NASDAQ futures. So I can type in MNQ1 exclamation. I'll say that I want it to buy. My sentiment will be bullish. I don't have to put in a price. Let's just say I want to buy one contract. And since I work with TradeStation, I can also set a take profit and a stop loss bracket to my trade. So I'll do a relative take profit percent. I'll say I want to take profits at 1% above my entry, or let's just call it 2, just for simple math here. And then the stop loss type, I'll do a trailing stop percent of 1%. And then I can hit test on this so that it doesn't actually send a real webhook call. But when I hit confirm, it basically has now built the JSON payload that I can paste in TradingView. There's certain things I can do to make sure that this uses TradingView placeholders, or I could just take this exact message and run with it if I want to. But then, of course, every alert that gets sent is going to have the same time associated with it if I go into the debugger. And it also has test in here. So there's a few modifications that I need to make in order for this to work. The first is I'll copy the pay. If let's say I'm doing this on TradingView, then I'll copy this whole thing. I'll set up an alert, but then I'm going to replace that time with the time now placeholder. I'll remove test, and then I have everything else ready to go. The ticker was explicitly stated, but I could change this back to MNQ1 exclamation mark. I could set it to the next contract if I want to, maybe put in the ticker for the chart by pasting in this ticker placeholder. So you have a lot of options here, but if it's a little unclear as to exactly how the webhook should be constructed, this testing tool does, give you a little bit of a builder that you can play with. We are going to expand on this in the future, where we can kind of let you choose who's your broker, what asset class are you trading? Is this a signal for TradingView? And in asking these questions or filling out these the form fields will help you construct the correct payload for your exact settings.
Yeah, so I wanted to bring this up because I found myself when we're doing the videos for the different types of ways of using Traders Post, you might find yourself in the situation where you've pasted in the sample JSON payload over here, and in TradingView, people might not know, but if you click away, it checks to make sure that this message is an appropriate JSON format. So TradingView already knows that this is a common format that people will use in order to send messages back and forth not back and forth, but send messages to a third-party system, and so it wants to make sure that save yourself the headache by if you have any typos or anything like that. But let's say you wanted to then expand this and add some other feature. So let's say you're adding sentiment flat. You might be in a situation here where you enter that in, and then it's off. It says something's off, and you might be wondering, oh, what did I do wrong? And if you're a coder or you're practiced with it, I could see already that I forgot the comma over here when I added it in, and that's a very common thing if you're not used to JSON format, that you might mistake that, and then also you might be confused by the indentation. Hey, why am I getting this wrong over here? 1 second. Oh, because I have a comment again. The indentation here, I felt like I needed to have indentation, but you don't have to do that. And so having the builder there is just super useful. Can you just remind me one more time, how do you got to what was the buttons you clicked to get there?
Yeah, so if you scroll down a little bit there, oh, sorry, click send request first. I didn't realize which page you were on.
Oh, yes,
okay.
That's right.
So now you can construct it, and then you can hit confirm at the bottom.
Perfect. Yeah. Okay. So that's useful to know. I'm going to surface that. Excellent. It's so funny. I wonder if people, if other, I mean, it makes sense for us. We're in a meeting sometimes, and we'll see that something drastically happened on a stock chart, and we could all be like, "Okay, 1 second, we got to go take a look at what's going on with the with the cues." But I wonder what people in regular life, if they can stop their board meeting. And, excuse me, I'm gonna have to check my trading view to see if the price has if my order has filled. I find that pretty funny.
Well, that's one
See,
good reason to automate your trading so that you don't have to be distracted in the middle of a board meeting. You know your trades are getting executed the way they should be.
I can't imagine. I guess this comes from being a coder. If I automated a thing, I'd be even more paranoid. I'd be sitting there going, "Oh, I could have made this better, or I have to account for that." I mean, we were doing that just today, like going over, "Hey, how could we actually code this to make it work a little bit more cooler?" Always want to capitalize how to get a few more basis points on a given trade.
Yeah, I joke like people won't look at their screens even when they set up automated trading, but we know for sure we all still look at everything. We want to see every alert as well.
Excellent. All right. So the next question we have here is came from someone on Discord. They were asking if it's possible to set the basically they wanted the position that they were trading for it to be half of the position there, and they didn't want to have to calculate it manually to put that in the alert message field. And they were asking how can they get around that. Well, this is one of the one of the nice advantages of traders posts. You can have relative position sizing, and so when you are in, actually, I'll just show that here. Instead of going in and having to choose a specific set a specific quantity, instead of having to choose a specific quantity within this area, you can in your strategy set it up so that you are the position size is a percentage of the existing position. So that's over here under position size settings. You can have a dynamic calculation, which is you can choose a specific amount, so a dollar amount, the risk for the position, or percentage of the portfolio value. So if you choose percentage of the portfolio value, you can do, for example, you do 10%, and then that'll be the quantity that's used. If I got that correct, Mike.
Yeah. So percentage of portfolio value would be the account value of that broker at that time. So if I have a TD Ameritrade account with $10,000 in it, and I put a percent of portfolio of 10%, then my trade size, the value of my trade would be $1,000. So it takes $1,000 divided by the current market price to determine the quantity that it should purchase to make sure that it's purchasing 10% of your portfolio into that one asset, whatever ticker you send over. I feel like this question also kind of covers something that we are working on. We do have a new feature that we are going to be supporting where you can send over a payload that tells us to sell, let's say, half of your existing position. So let's say in that scenario I gave, I bought $1,000 worth of Microsoft. I could send a signal to sell half of that position by sending over a payload that has some instructions to say, sell half of the position that I have. So let's say, if it's 6 shares or whatever it is for Microsoft today, it's going to sell 3 shares to cut your position in half. And then you could send another signal to say, cut that position in half again. And so it'll, can't really sell a share and a half unless fractional is enabled. But let's assume it sells 2 shares and then you're left with 1. So we do have some tools we're implementing to where you can control a percentage of your portfolio. You could cut down a percentage of your position, and we'll add those to the JSON payload in the future here.
Okay, cool. So we'll touch on that again. I think maybe in the next office hours. We'll play around with that a little bit because this is something I only recently thought of. I'm so used to calculating that dynamically in the strategy. I like the
Mm.
idea of being able to on Traders Book.
Yeah, it also keeps it consistent, right? If I use percentage of portfolio in my strategy on Traders Post, one, I never have to send a quantity from TradingView. I know that it will always take my account balance and calculate 10%. So if I have like a daily strategy that runs and I always want to trade 10% of my balance, then I trade today, I make some profit. Then tomorrow I've got $11,000 in my account. Now I want to trade 10% of that. So instead of it trading, 1,000, it's going to trade 1,100. And that's obviously going to scale as my account balance grows, or diminish if my account balance comes down. But on any particular point in time, it's always going to trade 10% of the balance.
I always tell myself that if my account balance decreases, I need to increase my position size, because then I need to be right less often in order to get back to where I was before. There's no flaw in that logic, so you don't need to comment on that, Mike, at all whatsoever.
Fair enough.
All right. So this is another question that came up in Discord group, and that is if someone wants to know which crypto tokens they can trade. So just keep in mind here, this is not a holy grail. There's none of these platforms where you can trade any coin that you've heard of, right? They're the coins that can be traded are dependent on the broker that you're actually dealing with. In this case, we're dealing with Coinbase. So if a coin is available there, then it's most likely available to trade. Now, there's always possibilities where brokers can halt trading on particular tickers for any number of reasons, crypto as well. But you're never going to be able to trade a coin that's not available at the broker that you're dealing with.
That's true. Maybe to get even more nuanced with this, it's probably worth pointing out that crypto is always traded in pairs, and the quote pair matters here as well, or the quote asset matters. So if you have a US based account at Coinbase, in all likelihood, you're going to be trading the USD or the USDT pairs. So you won't be trading the Euro pairs or British pound pairs, but those are tickers that do show up in our interface regardless of where your account is geographically located. So when you're looking through the list of all the trading pairs on Coinbase, just make sure that your signal is designed to send a pair that you can actually trade in your account. That's typically seen, in your Coinbase account. You can see where, what asset you've defined as your main country asset. But, I think if you've been trading crypto long enough, you typically know what tokens or what pairs you can trade and which ones you can't. To Tom's point, though, once you've narrowed down your list of quote assets you're allowed to trade, USD and USDT most likely, then you can just go through that list and figure out which tokens we currently support on the platform. Anything that's currently active with Coinbase is what we are presenting on the platform. So if it's tradable today, then it's tradable on Traders Post as well.
There was a script I did recently where what was required was to analyze the pairs. So let's say you want to analyze a crypto token, Bitcoin, but they wanted to have information from multiple different currency pairs. So BTC, USD, USDT, FUSD, BUSD, and a bunch of different things. And it was great to know that TradingView does have a constant that is siminfo.baseCurrency that allows you to grab the ticker, the coin you're dealing with, just like the Link or BTC or ETH or whatever, and then build out with a ticker.new. You can build out whatever currencies you want, then go through the different requests, build out your whatever system you want with analyze that however you want to, and then go ahead and execute the trade on the ticker that you're on. So
that's kind of cool.
Love that. Just aggregating a bunch of information from all kinds of different exchanges and currencies in order to get a fuller view of what's actually going on.
So does the sim info also have the current quote asset that you're viewing on the chart?
Yes.
Okay.
Right.
So you can pull so you're saying sim info base asset, which would be like ETH for Ethereum. And then you can right. Oh, base currency. And then you can run, you just do a string concatenation with that to get all the different types of quote assets to test with request.
Not exactly. You'll get an error if you do that, because then it turns it into a series. What you do is you use a function called ticker.new, and then you build out. You pass it the exchange, you pass it the base currency, and then you pass it the currency you want to, like the currency the denominator that you want to be dealing with, and then it returns the proper thing the proper string that you can go ahead and request that security with.
That's a cool little tidbit. I didn't know that they had that now.
Yeah, so you're able to do like this you're able to get like large amounts of information to then decide on your trade. So let's say you want to deal with volume, the volatility, whatever. You can calculate it across essentially up to 40 resources you can gather, and then really get a cool signal.
That is cool.
One thing I had a problem with, one day I'll do this, and it's someone had this strategy of a performance difference to be able to grab, let's say you're trading Ethereum and Bitcoin, and you're calculating the performances, and then if there's a difference of a certain amount, go ahead and buy whatever, short the one signal, go long the other currency. And I always thought that was cool. This idea that as these assets that are correlated together are moving, as soon as any divergence, you're taking a trade, waiting for that convergence to happen. And at the time, I didn't have the skills to do it, but now that I'm thinking about it, I do have the skills to do it now. I should make something like that for Traders Post. It might be an interesting strategy to test out.
So I think you're referring to classical pairs trading there. That's where you measure the correlation and co-integration between two different assets. And if they diverge, then you can go long one and short the other, or vice versa. That's a very, very like fundamental strategy that's been around for a really long time. And I want to do it on TradingView. I think I mentioned to you a few weeks back, we should do a session where we work on that together, because you can do that in stocks too, and futures.
Well, the strategy tester doesn't allow you. The reason I didn't really put too much stock into it is that the strategy tester only allows you to trade one asset.
One asset. So you have to write two strategies in two different windows. You have to run them at the same time.
Or we build it as an indicator, and it does all the strategy calculations that we would want, and we basically build our own mini back tester on our own. Then when we send the signals over to Traders Post, it can execute it the way that it needs to. That might be pretty cool.
Okay, if you guys are interested in us exploring pairs trading, please let us know, because this is something both Tom and I are very excited about.
All right, so here, one more question. Let's go with, actually, we're at the 30-minute mark. We're over our time, so I'll just ask you this one question out of the blue. I was going to throw in one there for me to know more about Mike here. And that is this. If you could choose one asset to buy and hold, which would it be? Through thick and thin, you got to buy and hold this one asset.
So I think for a long time it was SPY. SPY was my favorite because it was cheaper than Vanguard's VOO. The expense ratio is a little bit cheaper. I think it's 4 basis points annually. So over a very, very long period of time, you want to keep your expense ratio as low as possible and get good exposure to the market. In general, the S&P 500 is one of the best asset classes to choose. It's a good mix of companies across the board, and it's not so tech heavy that you look great when we got these waves up in the tech industry, but whenever there's a correction in tech, you're mitigated a bit by having some of the other Fortune 500 companies in that list. That said, right now, given where tech has been and where it's going, I'm pretty heavy on XLK because it's a better tech sector index. It's part of the spider sector ETFs. It's a well-established index. It's fairly low expense ratio. And I've been loading up on that one over the last couple of years just because the tech exposure is just unbeatable right now. And It's leading everything. So what do they call it? The Magnificent Seven is basically what's leading the entire S&P 500. I'd prefer not to have missed out on that exposure. So it's a tough answer. In the short term, I'm pretty tech heavy. Very long term, if you ask me what I would hold for 40 years, probably the SPY.
See, so that's the gun to my head. Of course, I would choose crypto or tech. It would be a battle between those two. Gotcha. But if when I hear stuff like the Magnificent Seven, I think to myself, I'm going to hear that. I'm going to read that in a history book of people go, and the crash was unbelievable.
Exactly.
And I go, I don't want to be sitting around waiting for that. And so if sometimes I play with this idea, I'm Canadian. And so it'd be very useful for the asset for me to hold on long term to be the US dollar. The US dollar ends up, if you're not a US citizen, you end up with this bonus this exchange bonus that you're getting because United States exports the inflation outwards, right? They to other countries, and
Mhm.
so there's a benefit to holding the dollars, and there's no liquidity risk, right? You can hold it within your bank account. You don't have to even have a brokerage account for it. It's fantastic, and I subscribe to the idea that maybe many people think that the dollar will crash, that it'll end by crashing,
Mm.
and I think it will crash, but crash up. That as the need for dollars increase. I mean, the short version of it is that the world is always short dollars. It's the world reserve currency, so everyone's always short dollars, and
Mhm.
so you can end up with the squeeze that happens, where you can have the dollar be insanely high. And at the lockdown crisis, the dollar skyrocketed.
Mhm.
I mean, people were like, "What is going on with this dollar?" And then it crashed, and then it had this other run up. When we had this run up, I believe in 2022, the dollar just marched up from its lows to new highs,
Mm.
and so I think we're just going to. And when you take a look from 2008 till now, it keeps stair stepping. The dollar keeps stair stepping. That's where I go. That's a perfect trade. I want to be there at the next rise, the next rise, the next rise, and for the next 40 years, that's what I would choose.
Interesting. Okay. Yeah, we'll have to talk more about currency holds, because that's an interesting concept. I'm curious. Do you get a yield on top of that cash by exposing it to money markets or bills, or do you?
I haven't tried that yet. My family does. They'll put it into bonds for that, but
Treasuries,
uh,
yeah.
treasuries were at 0% for the longest time, and I never grew up with the idea of having
Right.
treasuries. So I'm starting to think about that now.
I would say keep, act soon, because I think, ultimately they'll come down eventually here. That I think everybody's pretty well convinced that in the March Fed decision, we'll start to see a potential reduction in rates. What was the Fed Watch tool right now shows a probability of 10% chance of a reduction in the Fed funds rate, 90% chance that we'll pause, but that chance of reduction goes up in May, in June, in July, September. So if rates start
Wait, do you
coming
think we're
down,
going to zero interest rates?
no, I don't think we're going to zero, but I think we are going to
Okay,
start lowering interest rates by 25 basis points in the coming 2 years or so.
I see.
Um,
Oh, we're
that's
gonna have to talk
that's
about this someday because I think we're
yeah.
going higher yields. I think we're going to 6, 7, 8%.
That's not, at least not what the futures market is predicting at the moment. And so far they've been spot on, meeting after meeting. But right now it's pretty high confidence that we'll see a pause again here at the next meeting. So if that's the case, Treasury bills will remain where they are right now. But now's the time to buy some longer term, longer dated Treasury bills and get them at over 5%.
Well, I'll correct myself. I think the short dated, the 2 year bonds, those go to 2%, but I think that the long term ones go up to much higher. I think we get a
Oh,
very steep.
interesting. Yeah, get an inversion the other way. All right, well, keep an eye on it.
All right. Well, I'll know where my money is because if I see a 7% bond, I'm getting that. Are you kidding me? I'm getting a
Right?
7% bond for sure. Free
Yeah,
money.
right.
All right. Well, that's it for office hours for February 16th, 2024. As always, it's a pleasure to hear from you guys. Again, like you guys saw, you have questions in the Discord group, you have questions in the comments. We're always happy to answer in order to make the platform better. So we'll see you next week, and we'll wish you guys a fantastic weekend. Thanks for watching.
Cheers, Tom. Have a good one.